Thanks for checking in. We're going to be looking at the Newmarket market update. We're going to be looking at all home types statistics. Then we're going to be jumping into specific housing types statistics. And then we're going to be jumping into some of the communities in Newmarket and how they're holding up in this market. And then we're going to be looking at the rental market to see how it's been performing year over year. So let's get right into it with the Newmarket real estate market stats for all home types. When we're looking at the median sale price, $895,000 to finish February. That was down 7.9% month over month and down 18.3% year over year, or $200,000. When we're looking at the sales volume, sales were at 47. That was an uptick of 6.8%, or 3 additional sales month over month, but down 31.9% year over year, or 22 fewer sales as compared to last February. New listings sitting at 133 new listings for February. That was down 11.3% from January and actually down 15.3% year over year, or 24 fewer new listings for February than what we saw last year. Now, it's very possible that weather has at least a partial impact in this. I'm not going to say that it is what is the root cause of why we're seeing lower prices, lower sales, lower active new listings. But we've had some pretty gnarly weather here, and that's potentially adjusted some things. So we're going to see March is going to be a very key month to kind of see how the market performs after that. We're looking at active listings, 253 active listings in Newmarket. That's up 4.1% month over month and up 13.5% year over year. Sales to new listings ratio, so anything below 40 or in a buyer's market, buyer's conditions, we're sitting at 35%. That's actually up 6 percentage points. We're sitting at 29 for the sales to new listings ratio in January, but it's actually down 9 percentage points when we look at it year over year, where we're sitting at 44 or more in a balanced market. Let's look at now the months of inventory, sitting at 5.16 months of inventory. That's down 6.5% month over month and actually up 73.7% year over year. Now, February was a bit of an outlier in 2025. When we look at some deeper charts, we'll see that that was a bit of an outlier when it comes to 2025. Average days on market sitting at 42 days on market. Now, the condo market has a lot to do with this. That was up 2.4% month over month, but up 61.5% year over year. So an additional 26 days on market to sell. When we're looking at sales to list price, it was at 97% of asking. That was basically the same month over month, but it was 4 percentage points lower year over year because we were actually selling, the average home was selling for ask or just a little bit above that. So definitely looking at strong buyers conditions. We can see at the signals on the right hand side, buyers leverage advantage market. The only one basically sitting in the neutral was the new listings. Let's jump over to the first chart on the top left side. We're looking at the median sale price in Newmarket from February 2025 to February 2026. We can see that the prices did quite well for February 25. They were sitting at $1,090,000. And then we dropped off and was pretty even from March until June, sitting between $1,020,000 and $1,010,000. And then July, we saw the bigger drop off, and it's kind of trended all the way down to the end of January. So we have had a nice little uptick in prices, kind of brings us back to where we were in November. Definitely need to keep an eye for March to see if we continue the upswing here, or if we follow somewhat of the same path as last year, where we saw a decrease in price and then some stagnation through the next couple months. You know, we haven't resolved the trade deal with the US or with Mexico yet, so that's on a lot of people's minds. We had a really poor jobs market that came out just recently. Inflation is starting to stabilize, but we've also got the war going on in Iran now, so it doesn't look like we're going to get any meaningful movements in the bond market at all, which directly affects the prices people pay on their mortgages. If we're looking at the right chart, here's kind of what we saw in sales. We had strong sales February of last year. That dipped off a bit in March and April, and then came in nice and strong for May, June, July, and then we just slowly moved to the downside for the rest of the year. So a nice little uptick for February there at 47, but definitely a lot less than what we were seeing to start 2025. And then at the bottom here, we're looking at the what type of a market we're in. We can see that we're leaning to the left side, which is the buyer's market, at 35% sales to new listings. So let's break down some of the charts over the last year. If we look at the top left, we're looking at months of inventory. So this has kind of really been hovering from last March until now, anywhere from 4 months to 5.5 months, sitting at a little bit on the higher range when we look out over the last year. If we're looking at the top right chart, it's the average days on market. This is for February 2025 to February 2026, and we can see the real big increase in days in market, sitting at 42. It's been very high over the last 3 months, significantly higher than what we saw to start last year. At the bottom left, we're looking at active listings. So we can see active listings started 2025 at 223. It made a decent uptick month after month after month up until we hit about May, June, where we peaked out in the low 400s, and then we started to roll down for the rest of the year. To start January, we're not making as high of an adjustment when it comes to active listings. They're kind of slowly working their way up, which is a lot different than what we saw last year. So, in order for prices to start to stabilize, we need to see active listings stabilize. The more listings that are on the market, the more opportunities or choices there are for buyers, and that's really going to have a big effect on the market. And another thing helping out is the new listings. We're seeing new listings fall below where we saw them last year. So it'll be interesting to see over March, April, and May how they proceed upwards. And do they follow a similar pattern as what we saw last year? Are they going to be a little bit more subdued? Are they going to be a little bit more flatline, which could definitely help to at least find a potential bottom in the market? Now, when we're looking at specific housing types, let's start with the detached and semi-detached. Now, this banner at the top here, this is the year-over-year kind of health. So year-over-year for detached, sharp decline. When it comes to semi-detached, a deep buyer's market. So when we're looking at detached on the inside and for semi-detached on the inside, these are month over month statistics. So for detached, prices were up 3.9% for 1,070,000. Months of inventory was sitting at 5.1 months of inventory, and sales to new listings at 34%. So definitely buyers leaning market for both of those data points. Sales price to list price was sitting at 99%, so prices are starting to get a little bit more dialed in for where buyers want to pay. Sales were up 3.7% month over month, sitting at 27 for the detached. Active listings, though, definitely a nice, decent sized chunk with 148 options to choose from in the Newmarket area. Looking at semi-detached, now this number's a bit skewed just because there was only 3 sales. So if you get 3 homes in a certain area, that's maybe in the older part of Newmarket, you're definitely going to get some sway in prices. So prices were down 9%, 676,000. Months of inventory, though, we're sitting at 6.25 months of inventory, which is quite high. And then sales to new listings ratio sitting at 19%. So definitely a lot to choose from when it comes to semi-detached in Newmarket. Let's now jump over to townhomes. So we can see that townhomes are sitting at 817,500. Semis and towns typically a lot closer to price than what we're seeing here. So I think this will straighten out over the next couple months as we get some more sales into the spring. But townhomes sitting at 817,500. Months of inventory, though, is still sitting at 5.75 months of inventory, which is quite high. And then sales to new listings ratio sitting at 33%. To say quite high, this is more of a balanced market for at least the months of inventory. It's definitely a buyer's market when we're looking at sales to new listings ratio. Condo apartments, this is where the big drag is on the overall statistics that we were looking at. Median price sitting at $490,250. That was actually up 6.6% month over month. Now the months of inventory is sitting at 8 months of inventory. So tons of condos sitting on the market compared to the amount that are selling. When we look at the sales to new listings ratio, sitting at 24%. So a lot worse than what we're seeing when it comes to townhomes. So let's look at detached versus towns and semis. Okay, so the blue line is your detached price. The red line is your towns and semis price. And then at the bottom here, we're looking at what the spread between the two are. The red dotted line is kind of your historical average over the last 5 years. And when you're above that line, it means that it costs, you know, a lot more money for a detached than it does for a town or a semi. So if you're downsizing, if you're in a detached property and you want to downsize into a semi or a town, you know, the spread is very attractive. You can sell your detached home, move into a town or a semi, and be able to bank more money than what we've seen in the past. So if you look at February of 2020 at the bottom there, and February of 2020, yeah, and then June of 2020, you know, it made a lot more sense to move up to a detached from a semi in a town. So right now, we're definitely above that line. And this might be a great opportunity for individuals in detached properties who don't need all that property and they want to move down to something a little bit smaller, something a little bit more convenient for them. Then townhomes and semis definitely might check that box. Now let's also look at detached versus condo. So the spread for detached and condo isn't as, I guess, favorable as what we've kind of seen back in February of 2022, back in February of 2025, even 2024 as well. So we're sitting below that line. So I think if you're looking to downsize and towns and semis are where you were thinking, now's a great time to do so. Might still want to wait a little bit if condo is the area of choice that you're thinking to go to. But if you tune in, we cover this every single month to let you know when those make sense. Now let's look at specific communities in Newmarket. Median price month over month. Who did the best? Gorham and College Manor up 13.5%. Huron Heights, Leslie Valley 8.3% month over month, and then Stonehaven 2.7%. Fastest sales, Summerhill Estates took 9 days to sell on average. Armitage was 23 days, and Huron Heights, Leslie Valley was 28 days. And then if we're looking at the most active, we saw Central Newmarket with 11 sales, Stonehaven with 8 sales, and then Gorham and College Manor with 7. At the bottom here, we're looking kind of at, okay, Central Newmarket, Stonehaven both saw some great sales. They also saw a lot of new listings. So their sales to new listings ratio is just below where I would say we're in a true balance market, but compared to what we're seeing everywhere else here, they were the two communities that were a little bit more balanced. When we're looking at Gorham and College Manor, Huron Heights and Leslie Valley, they were much more seller leaning. I would say Gorham, College Manor just on the high end of the balance market, but Huron Heights, Leslie Valley, definitely a seller's market. We can see that 8 new listings, 6 sales, a lot of it's being absorbed, sold on in the market. I think the price points for that area are very attractive. So if you are thinking about selling in those two areas, they are definitely seeing much better activity for sellers than a lot of the other places. Especially if we're looking at Summerhill Estates, Glenway, Woodland Hill, Bristol, London. You know, their sales to new listings ratios are sitting at 18, 22, 13, 27. Definitely buyer leaning just because of how many new listings are hitting the market and how few sales that we're seeing there. So that's going to have an effect on your price. You need to be priced according to those markets. And then, the outlier is Armitage. 1 new listing, 3 sales. It's showing that the sales to new listings ratio is 300, but we really don't have enough data for them for a true number, so that is a little bit skewed on that end. And then when we're looking at the rental market, 1 beds are getting a median price of $1,895, 2 beds $2,000, 3 beds $2,700, 4 beds $3,200. And if we're looking at the sales to new listings ratio, we can see it's a very landlord friendly market here. 130% on the 1 bedroom, 78% on the 2 beds, 64% on the 3 beds, and then 93% on the 4 beds. Now we did see year over year prices for 2s, 3, and 4 beds come down quite a bit, but 1 beds actually strengthened a bit year over year. So there's definitely a lot of demand there. Surprisingly though, days on market still sitting at 39, 41, 33, and 37 days on market. So they are taking over a month to sell. So when you're a landlord, you need to make, or sorry, not to rent. When you're a landlord, it's always key to have that emergency 1 month in the bank in case, you know, a tenant leaves you without notice and then you've got to put it on the market. It could take 1 to 2 months of it sitting empty in certain circumstances. So having that money on the side is extremely important. You don't want to rush and put someone in the property that's going to turn around and maybe not pay you rent or damage the property because you rush to put just anybody you could find in. So that's it for February 2026. If you go to my website, meetmatthew.ca, I've got full breakdowns for Newmarket, all housing types, the areas, all the communities, and even the rental markets, so that you can get month-to-month updates that are more detailed than what I'm giving here, so that you can really keep an eye on your local area and see how your market's performing. Thanks a lot. Bye.